So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is the best way for you to grow your wealth. Hey, I'm your host, Brett Swarts. In each episode, I am joined by some of the best real estate minds, financial and wealth advisors in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. He is the CEO and founder of JID Investments. You can find him at jidinvestments.com. He has a unique background from the military to passion for real estate, and he loves helping people become more passive in their finances by owning real estate, along with himself and his partners as they seek out proven operators and then pull money together to go in it and hopefully to win well and win well for your finances. So that being said, please welcome John Rubino to the show. Hey, John, how you doing?
Hi, Brett. Good to see you. Thanks for having me.
Absolutely. We're excited to dive in. Would you give our listeners a quick overview of your background and your current focus?
Sure. Yeah, born and raised in Brooklyn, New York. Graduated college way back in 1997 and served in the Navy for 20 years. You can see some of these cool airplanes behind me. It was a blast. Got to do that as my first dream job. And back in 2013, I started my second dream job part-time while I was finishing my career in the Navy with JID Investments. Stood up the business after really loving and having a passion for real estate. Started back in the early 2000s. And just really stayed with real estate for about a good, 8-9 years. I passively invested with some good friends and learned a lot about the business, learned about the analysis, the due diligence, looking at different markets, understanding the different concepts of budgets, and looking at how deals are put together, how to structure deals. And, we're always learning. I've been with JID for over 8 years now. And when I started the business, I had about 4 years left to go in the military. And so I'm kind of glad I did it then, because I really kind of got my feet wet. I got beat up a bit, understood things, and kind of grew so that I really had confidence coming out of the Navy to do it full time. And now that I've been doing it for going on 4 years now, full time, we've really enjoyed and seen a lot of the fruition of the work we've done and the energy we've put into it at a full-time pace. And so we've completed about 16 projects to date, a little over $6.5 million invested, with about $2.25 million realized in revenue. And we're currently managing 6 assets in our portfolio, about $15 million invested, with about $8 to $12 million of projected revenue. Our business is unique. We serve and we work with sponsors and investors that have asset class investments where they're actively pursuing and they're actively managing and overseeing the project. And we come in as a partner, as a joint venture limited partner. We have about 146, 150 investors that we go out to, and we raise money on a deal-by-deal basis. We do it through a Form D, 506B or C filing through our corporate securities attorney. And we're able to raise anywhere from $500,000 to $5 million a project. So the sponsors love us because we bring value and we can raise a level of capital that's very challenging for them at times to go out and raise. And for our investors, we give them the opportunity to look at really solid and vetted projects that we've put through our process. And we bring it to them, hopefully on a silver platter, for them to look at and spend a limited amount of time given their busy schedules, because they're out doing their jobs and they're running their companies full time. My partner David and I, we put our stamp of approval on that. We put up our money to invest in, and we're hopefully bringing it to our investors to potentially participate in.
I love it. Adding value and connecting the parties, so important. And it helps for the operator to focus on buying the deals and operating. And then for
Absolutely.
yourselves to be an extra side and ears on that, a set of eyes and set of ears on that as well, and then to present that to passive investors who don't have the time or the energy to vet all of these. So that makes perfect sense. Now, before we dive into a couple actual deals and break down some returns and such, I'm curious, who was John growing up? And I think we've all been given certain gifts, John. Right, and these gifts are given to us from God to be able to be a blessing to others. So I'm curious, what was that? What's that? Maybe one or two gifts, maybe that you identify when you were younger, that helps how you bless others today.
Yeah, listen, you hit the nail on the head. I love that you said that, Brad. It means a lot. Faith and family to me are hand in hand. My mom and dad were hardworking. I was an only child, but they worked hard to give me a good life. But I didn't take that for granted. Dad was a U.S. Marine Corps infantry officer. He was recon. He fought for our country in Korea, won the Bronze Star and the Purple Heart. He's my hero. I got a shadow box on my wall here, and every day I look at him and just think of the wonderful opportunity he's given me in life. Started his own real estate company as a construction builder in New York City, put up 8 floors on the World Trade Center in 1993 when the first bomb went off. And mom was a school teacher 30 years and ran her own private practice as a therapist. She did family therapy, and so I had 2 parents that both owned their own businesses as well as were specialists at what they did best. And they always pushed me hard. They always pushed me hard with school and to work hard. I went to Catholic school for 12 years of my life. Went to military high school. I went to a military college. So that structure and organization has always been around for my family. But mom and dad always taught me too that number one in my life is my faith. And it wasn't for about a few years back that I had a really challenging situation in my life that I went through, that I feel God brought me through and brought me out of it. And at the end of that, I think, a couple of things that he taught me was, hey, I'm here for you, but you got to find me. I'm not going to find you. And he also kind of gave me that gift that, hey, if you stick with me, things are going to be good. And you know what? I've been with, and I've never changed. I've kind of felt like that was my resurrection. I feel like now my faith is my foundation and my family's my foundation. And so that to me has been the greatest gift because it's given me the opportunity to live such a more fulfilling life. And I think through real estate, God has really put me in a position to touch people's lives, bring to them things that I never thought I would have been able to do before, and really just enjoy getting to know people, learning about them, sharing with them, and just having an overall relationship. Whether or not we do business together is fine, but as long as we can respect each other and look at each other in the eyes and know that we're going to, look at each other with respect and integrity, that means so much. So, it's a great question. I'm glad you asked it, but that to me are the 2 things that I'm really grateful for that mom and dad shared with me.
Absolutely love it. Yeah, that hits home. And my dad was an entrepreneur in construction and in the Bay Area, building houses, and so that's kind of I fell in love with real estate. And my mom was the foundation of my faith, and shared at a young age that was the most important thing, and it's never left, and it's always been the one thing that's been stable and consistent despite any other circumstance. If I feel I'm obeying and following God, like everything else can be going sideways, but I'm at peace. But the opposite is true. If I'm not right with God or close to Him, then everything else can be going great, but I'm not at peace, and so that's something that resonates a lot with me. So that being said, let's dive into some strategy here, right? Let's talk about some deals. What are you seeing right now? Maybe a current offering or deal that you're looking at. Maybe just kind of give us, or a sample deal that's done recently. Your choice on that, okay, John?
Yeah. So overall, obviously we're all challenged right now with the environment. We have COVID, we got the elections. Some of the big cities are dealing with some civil unrest. Our strategy has always been centered around the sponsor and really the market. Where are they operating? Who are they? What are they doing? And are they presenting us a project, an opportunity, an asset class that they've done before? So I like the rinse and repeat. I like those sponsors that come to us and say, hey, we've done 100 of these. this is something we've done before in this market, because they know everything at that point. They know the city codes. They know what they have to deal with when it comes to a specific opportunity. They know the ins and outs of that specific opportunity. They've dealt with the risks and the challenges. So that to me is always important. And we've had that mentality pre-COVID, and I think it's really helped us to not necessarily be vulnerable, or I should say invulnerable, to get through this situation, but it's really helped us to be resilient. And it's helped us to really kind of come to grasp that, yes, we have to navigate through some choppy waters, but we're still doing real well. I mean, we're hitting 1% to 2% inside our projected returns. Our sponsors are getting creative and still making things happen. And we stick by our mindset that the developer makes the money when they purchase the property, not when they sell it. So that's very important for us. Location, the sponsor, and then, we look at the risk, the returns. We look at all the intangibles, but really the sponsor and the markets are big. We're seeing a ton of deals right now, and we're seeing deals all over the country, West Coast, East Coast, Midwest, Northeast, but we still are staying with our formula for success. And in our case, we love Washington, D.C. We love the Virginia and the Maryland market because it's my backyard, and it's 3 of the best potential markets in the country. We also like the Southeast. We like the Southeast because the cost of living is low. It's very conservatively based with their fiscal and their economies. The weather's great. A lot of businesses are moving down there, and the cost of living is low. So when you add all those things up, those are just great places to invest right now. And we're seeing a lot of folks down there. So saturation as well as managing things, but we really like those markets. We just fully funded a apartment development in Frederick, Maryland. And Frederick, Maryland's interesting, and it's a great market because it's in the heart of the biomed district in the country. So you got the National Institute of Health, where Dr. Fauci is. You got the National Cancer Institute. You have Fort Detrick, which is a biomedical research facility that's looking at vaccines right now. So where else would I want to invest in an area that is just exploding right now with what's going on, given, unfortunately, the pandemic, but at the same time, state-of-the-art studies and research. We're going to be doing 190 apartment unit development and construction. And then in about 4 years, when that project's done, we're going to turn around and we're going to recap out of the event. We're going to come out of the investment. We're bringing in $1.2 million of equity, which we raised in 12 hours, which was the most successful raise we've had to date. And, that'll all be long-term capital gains. And then what we'll probably end up doing is when we recap out, we'll get our $1.2 million back. And we're actually planning to make about 100% return over the 4 years. So a 2x on the returns. And what we'll end up doing is give our investors the opportunity at their discretion to then turn around and come in to potentially invest on the long-term hold, which at that point will be 190 units, fully stabilized, and basically collect in a cash flow distribution quarterly, semi-annually, and then have the back end capital gains sale whenever that goes to the final finish point. So that's the unique project, and it's exciting.
Make sure I gather, and thank you for sharing. That's fantastic.
Yeah.
So 190 units. They're building it from the ground up. Mm-hmm. DC, Maryland, and Maryland, and fantastic opportunity. Sounds great. Now, so that 1.2 million goes in today, and what you're hoping for is within is it 2 years or 4 years?
Months.
48 months.
Yep.
Okay.
Yep. 4 years.
4 years, then it's 2x, right? So you went from, if you put 100 grand in, let's say, then we're hopefully 200,000. At which point it's a refinance of that property, so the cash comes back out, and so you guys are made whole, and they can take their cash and just go with that and pay ordinary income tax on that, right? Because it'd be interest.
So they'll pay on the 48 month. Again, the company, the entity we stand up will make the 2x. We usually give 60% of that, so the investors will walk away with a 60% return on that over the 48 months. So it comes out to around 16% return on investment on their invested capital. So about 16% annualized, about 64% total project return. And then they'll end up having the opportunity to take that 64%. Now that's gains, that's long-term capital gains. Mm-hmm. And then we'll have an option on the follow-on to take a fraction, a portion of that money and the invested capital they brought in post-tax dollar, and then bring it into the long-term home, which you're right, that cash flow that they'll earn on that portion of the investment, which is the long-term home, will be treated as income. And then when we sell the property on the back end or we refinance out, that additional profit they receive would be treated as gain, long-term gain.
Okay. Got it. All right. Excellent. And first of all, fantastic returns and proven operator, great location. Yeah. So it's illiquid for 4 years. My 100,000 sits there. And then 4 years later, up to, let's call it 60% or so.
Yeah.
So I'm now about
60,000 on top of
about
100.
160,000, of which I could just roll into the deal long-term, right?
Yep.
And still defer my tax. Am I still following?
Well, no, you have to pay the capital gains because there wouldn't be a mechanism like an opportunity zone or a 1031 or 1231 to use in this case. So you would have to pay that gain on the 60. So, 15% plus your state tax. So let's just say you're paying 10,000, hypothetically or notionally. So you're taking 50,000 out of the 60. You get your 100,000 in principal. And then we'll have a scenario where we may have 50% of the monies or 40% or something where we work out with the sponsor to keep a tweak of equity in there so that they can go out and get the conventional financing on the permanent long-term hold.
Okay, and we're getting some details here, but the key is nice returns, right? Some tax stuff. We do have the Deferred Sales Trust for larger deals, 500,000 or more, or $1 million or more of equity to kind of solve some of that. But that being said, that's fantastic. Okay, great. So then we go long-term hold, and the whole idea is to get, let's say 10, 15, % on your money, right? Passively. Right. And for track records that have been for people who have long-term track records, and then just continue to do that. And now once you're in it long-term, you get the depreciation, right, to offset some of the income. And it's really not rocket science, right? It's just about finding trusted operators, trusted professionals like yourself to bring the two together and being patient with your money. Is that a fair summary?
It is. And my job really is to go out to the market, to look at the property. It's really a great opportunity. And the reason why is, again, we're being very selective right now, given COVID, given where we are with the election and everything. We're really, really focusing on close to home developers. We've been doing deals with this developer. We're on our 11th project with them, and every project we've done has hit or exceeded profits and returns. So, for us, it was like, this is probably a no-brainer for us, given what's on the stat sheet. I went up there about 3 weeks ago. I saw identical properties that were about 10 miles away from our site. The property managers for both the two properties I looked at will be the same property manager that we use. So when you start looking at all these things, you're like, man, this is just, the risk is being mitigated on this each way I look at it. And of course there's risk. I mean, for us, the big thing here is, do we get the building permit? What's the financing look like and the funding look like for the construction? Are we going to get that? So these are all the things that we look at and are still kind of out there, but we know we've looked at this with a lens to really mitigate and get around the risk. There's no way to eliminate it. We know that.
Exactly, right. Otherwise, everyone would just throw all their money and all of it, right? There's always going to be a level of risk. That being said, what is your take on just the say post-election and even 6 months from now? What's your take on real estate values? Where do you think there'll be some opportunities? If so, what does that look like? Give us kind of your gut feeling over the next 6 to 24 months for real estate opportunities.
Well, right now, my focus is we have a very large opportunity zone raise, which you and I have spoken about, and it's in D.C. So I feel, regardless of who wins the election, D.C. will still be very well insulated and absorbed. We have the federal government, and we know the federal government's not getting any smaller. It's getting bigger. We have Amazon HQ2 that was announced about a year and a half ago. We're realizing the first year of that this year for 40,000 job increase just primary to Amazon over the next 10 years. So we're going to see a 3,800 to 4,000 increase in jobs over the next 10 years each year. So 40,000. And that doesn't include the tertiary, which we anticipate to be around 120,000 on top of that. So we're really excited about DC, regardless of the administration. But I really do think you have to see who wins this and how it kind of plays out, because I know there's not to get politics involved, the administrations have different visions on which way they want to go with the country from a tax perspective, which I'm sure you've looked at, from how they want to govern, from how they want to implement policy, to how they want to, look at the housing market and what regulations or deregulations they want to bring in. So there's a lot of things. I'm always going to be a market-based investor. I'm going to always be a market-focused business. And I love our markets. I really do. I really like where we are. And I still think, regardless of who gets in, we're going to do well. Some of the markets may take a little bit more of a hit versus others. You could argue that there's definitely a 180 on each potential administration that comes in or stays in nationally. But I think that, when you look at specific markets that you're in, that definitely would be your advantage going into a post-election year for this year, for presidential election.
Excellent. No, thanks for sharing.
Sure.
What's the biggest mistake you, a client, or a partner has made when it comes to capital gains tax deferral?
Well, I think that the biggest mistake I see is just, and myself included in this, is just really planning and understanding and really having an idea of what we need to do with those gains, before they're earned, right? And what are my options? What levers can I pull? Can I pull a DST? Can I do a 1031? Can I do an opportunity zone? What's available out there to me? Not the day I get the money back, but 3 years out, and how can I plan for that once the monies are coming in? And then how do I research those areas to make sure I'm staying current with changes in legislation, changes in potential policy, state, federal, local levels, so that I have options, I may want to do a DST, but I realize 3 years from now that I need to do an opportunity zone because opportunity zones have been blowing up. There's more on the plate. There's more flexibility. The laws have been kind of opened up a bit more. So just knowing what my options are and then just staying on top of that. Whether you do that yourself or you have a trusted agent you go to, your broker, your CPA, your DST professional, your capital gains professional, and just having those options available to you and your investors, in my case, or your clients, the people I work with, because I'm going to get that call and say, hey, look, I like what you want to do on the follow-on. Maybe it's an opportunity zone for me, but what are your folks doing from 1031's perspective or capital gains perspective or deferred DST perspective? These are all the things that we want to have in our back pocket.
Well said. Yep, absolutely. And you can get clarity with that with capitalgainstaxsolutions.com to learn more about all of those. That being said, John, are you ready for the lightning round?
Let's do it.
All right. Knowing what you know now, if you could go back to your 25-year-old self, what's the one golden nugget you would make sure you would do?
I would definitely invest more. I would have gotten a couple of profile properties. I think that if we could go back and do that, that would be wonderful. Just to have maybe, 10 or 12 single family, or have a 300 unit where I'm just going out and getting mailbox money every day. Man, I wish I could have done that.
Yeah, I know. Well said. Well said. What is the one book you've recommended or gifted the most in the past year?
Oh my goodness. I'm a big Robert Kiyosaki fan. I also love Dale Carnegie's How to Win Friends and Influence People. But I just started reading Extreme Ownership by Jocko and Leif. I can't remember Leif Brunson. Great book, Extreme Ownership. And then there's that Dichotomy of Leadership, which is a follow-on book. But I am loving it. These guys are pumping me up. And for me, and I'm sorry, I know this is the lightning round, I'm trying to scale my company right now. I'm trying to find those people I can bring in that can just really get us to the next level. And that book has just got me hanging off a cliff. I love it. So really good book. I highly recommend it.
So good. Likewise, I've had the Extreme Ownership. I got to check out the Dichotomy of Leadership. Give me a mobile or digital resource you recommend for your business.
Oh, I love LinkedIn. I love it. I'm on LinkedIn every day, posting pictures, utilizing it to just communicate, to advertise, to meet new people. I just think, I don't know how it's not $1,000 a year to be a member on LinkedIn. I know they have the sales navigators and stuff, but I really love LinkedIn. And YouTube has been great too, to get the message out, to share. I think when people see you like they are now and they hear us talking, it's great because they could take their time, they can go back and listen, they can pick out stuff rather than being pressured to talking to someone, face to face or on the phone. So I enjoy that. It lets their guard down a bit and it lets them, kind of see folks. But I love those two outlets. To me, those are the best right now.
Yeah, so well said. So true too. Favorite leadership quote or theme that you strive to live by?
Oh my goodness. I know I'm going to mess this up, but I'll do my best to remember. Colin Powell said that success is defined by how many times you fail. It's not defined by the success you really have, but the way you fail and how you pick yourself up to continue on. I don't know if I got it right, but really the fact that we have to allow ourselves to fail. Obviously, we don't want known failure or catastrophic failure or failure we sweep under the carpet. But we have to allow ourselves to really, take a hit every once in a while. It grounds us. It gives us a basis to focus on, to try to make ourselves better. I know Jocko talks about it in the book, Extreme Ownership, that, we got to take ownership. We got to allow ourselves to fail, because the only way we're going to learn is if we fail. So I think that, to me, I didn't get the quote exactly right, but, being allowed to fail is not necessarily a bad thing, as long as we learn from it and we implement it and make us better.
Well said. Next question. What are you curious about right now?
What am I curious about? I'm a little bit perturbed and a little bit concerned about what's going on in the nation. I really am. I'm really concerned about how things are changing, and I'm not going to get into all the details, but I just really hope that we find a way to come back together as a nation. We've always come together and we've always been united as a country, but it just seems like there's so many things out there now, and everybody's kind of waving a flag and calling their tribal, unit or whatever you want to call it. I just want to see people come back together. I want us to be the country I know we can be, and the country I was honored to serve. And it just hurts sometimes seeing what I see, but you know what? We can't just sit back and let it happen. We got to get out there and be motivated to make it better. So that's the one thing that's kind of concerning me a bit.
Yeah, let's hope for some more peace, more unity, more freedom, and more justice.
Amen.
How do you stay centered in your values, John, after all your success and after your years in the military and now your years in civilian life, right, and real estate and everything that you've been able to accomplish? How do you stay centered in your values? And then second, how do you stay encouraged to reach for new heights?
Yeah, so my faith is number one in my life. It's my foundation, followed by my family and my freedom and my friends. The 4 Fs. So I really think that having a foundation centered around faith and your relationship with God and Christ, to me, is what makes me who I am, and it's given me real balance. And being able to step away from the day and going and enjoying the family, taking my son to baseball practice or coaching my son's football team. I love that, just having the balance. And then what was your second one there? I missed that last one. Sorry.
Yeah, how do you stay encouraged to reach for new goals? Like, you accomplish all of these amazing things, and then what keeps you going to reach for new ones?
Talking to people like yourself, people that are doing great and are successful and want to instill that and share that with others, and just listening to people that just, again, share the same values that you have and that want to go out and do the things that you do. And, when you hang around winners, you're a winner. And I love feeding off the energy of people that I see want to do the same things I want to do. And that's why I love what I do. I just truly do.
I absolutely love it. I absolutely love it. With that being said, I want to thank you for being on the show.
Thank you.
I want you to give us one last thought, and also remind the listeners of where they can find you.
Yeah, I would say one last thought is, challenge yourself. Don't be afraid. A lot of times we may have things that hold us back, but if you feel good about something and you feel like it's something you want to take to the world, and you can help somebody with it, even if it's one person or 1,000,000, then go for it. Don't be afraid. Have a plan, and make sure you can execute. But when it's time to press the go button, go for it. Don't be afraid.
Love it, love it. And I thank you, John, first of all, for sharing your inspiration, sharing your wisdom, your service to our country, and sharing about your faith. So appreciate that, and it's really encouraging for me and our listeners. And
Thanks,
with that, I want to encourage you to keep using the gifts and talents you've been given to bless others and help people become financially free, right? And have more cash flow and invest in real estate. Absolutely love that. And with that, I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions Podcast. As always, we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust or investing passively with someone like John Rubino at jidinvestments.com, is the best way for you to grow your wealth. Hey, with that, please rate, review, subscribe. If you are selling a highly appreciated primary home, public stock, stock, real estate, private practice, business, cryptocurrency, please go to capitalgainstaxsolutions.com. Do what John told you to do and pre-plan and be there early, right? Because if you're too late, the tax is triggered. But if you can plan it, and you can with us at no additional charge, unless you use the trust, you get paid for using the Deferred Sales Trust, you can save a bunch of tax, and that's what we want to help you do. So with that, thank you, everybody. Go bless some people today, and we'll talk to you next time. Bye.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.